Welcome to Tradespoon. I'm Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our live discussion of the weekly Strategy Roundtable. We talk about current market conditions and any questions you may have about your subscription. For those of you who are new, welcome. If this is your first live event, do me a favor, tap in first. Always want to welcome new subscribers. This is my bio. I was Executive Vice President, Head of Technology at Options Express. My background is technology. I have a master's degree in computer science, specializing in statistics and artificial intelligence. I've been trading my own money for over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trades will be profitable or will equal past performance. All right, before we jump into trading psychology, let's talk about current market conditions. While I'm watching Square Trade. All right, so we did have a Fed decision. And we had earnings from Apple, right? Those are the two biggest unknowns. Apple, not the greatest earnings, right? 4 quarters of, deceleration in revenue, negative revenue growth, and Apple is down 1.5%. I think it was down as much as 3%. 173 is low. It's trading in the middle of the range again, despite QQQ and spiders, strong rally in QQQ spiders. So, I mean, that's not great, right? Usually the idea is, where Apple is going is where the market is going to go eventually. But still not horrible, right? It's not, I mean, down at this point only 1%. So it's, you could have a rally. More important than Apple earnings, I think, is the unemployment data that came in a little bit weaker than expected. ISM data had some, the data itself came in weaker, which is also important. ISM services, I think, came in at 51. I mean, durable good orders, I think, rallied a little bit hotter. So it had kind of, but irrelevant what it said, the initial reaction, we actually dropped below this key support 455, below 50-day moving average. After ISM, it did bounce back because it's extremely oversold. But this is, I think, is a very, no sound, hold on a second. You guys have a sound? Oh, all good now, okay. So I think this is really a constructive pattern, and you can see sharp rally in spiders, especially spiders and in value stocks. So we're back above the 50-day moving average, well, right at 50-day moving average. We briefly broke through this, and above this breakdown level, which is 432. Short-term market is overbought, right? But the ultimate question again, it's not what's going to happen. It looks like we will have Christmas rally, right? So the Christmas rally might look like maybe consolidation, maybe either retest or slightly break this. This is now your support line, right? So as long as we stay above the support line, bullish, but I think we're continue going higher into end of November. The question is, are we in the bull market? Is this a resumption of a bull market, and we are heading greater than 460, right? In first quarter or first half, right? First half of 24, right? Are we heading higher, right? Are we heading higher and breaking 460, or are we retesting 410 and heading lower in first half of 24, right? Very important if you're a medium-term trader, long-term trader, if you're an investor, right? Even short-term trader, you do want to figure out where the bias is, right? So that's the question, right? One, we're heading higher, right? It's a resumption of a bull market, and we're heading higher in the next 6 months. Two, we're still in a bear market, and this is a strong rally. We've seen these strong rallies, from March to, to August, and from October to February. So you do have these multi-months rally, met with multi-months, pullbacks. So that's the question. Are we retesting 380, right? Are we going to retest 380, or are we going to retest 460, right? Which one is going to be first? To 460 is about 30 points, right? 410 is about, let's call it 400, right? Another 30 points. So are we heading 30 points higher, 30 points lower, or breaking, above 460 versus breaking below 400? So that's the question, right? Let's just pause for a second. I mean, there are pros and cons on both sides, right? Interest rates are pulling back. Bulls have been waiting for that for a very long time. Dollar pulled back below 106. Very bullish signs, right? Very bullish signs. So is it at the end, right? Are the yields heading lower to 3.5%, or are they still going to consolidate and maybe have another leg up, same in the dollar? So let's see. Let's pause that question. Anyone? So let's go through and see. Basically, one, you're saying we're in the bull market, right? We're in the bull market. And two, you're saying, no, we're in the bear market. Right. Done. Two. Thank you, Kevin, Tom, Raphael, Michael, Mason, Coffee, Kevin, Ikai. Sorry if I mispronounced your name. Don, Claude, Federer, Mark, Brankel. What do you guys think? Give you a second. How many you say one, we're continuing to going higher, two, we're trading lower? Sideways, smart. Thank you, Mark. Two. All right, so we have side two. Okay, not a lot of people said one. I don't think nobody thinks we're in the bull market. Okay, so I agree with this. I don't think we're in the bull market, right? Especially, let's see how the only negative today or yesterday was, yeah, that Amazon, Microsoft, Google, Tesla and Apple, they're not participating in this latest rally, right? Google pulled back, still a weak rebound. Microsoft had a nice strong rebound. It's still grinding higher, but you would think that it should be much higher. And then Amazon is actually turning negative, right? Losing momentum. Meta turned negative yesterday. Let's see, where is it now? Reverse down, so also very weak rebound. So it looks like for the most part it's a catch-up trade in stocks that got beat up the most, whether it's IWM, right, small cap stocks, or regional banks, right, KRE, or ARC Innovation, right. So stocks that got sold off 20-30%, the asset classes, they are rebounding, right. And stronger stock like technology, they're for now underperforming, right. Same thing, American airline stocks. So for that reason, I do agree that we are still trading in the bear market, right? From seasonality perspective, right? We talked about seasonality. Actually, correlation dropped significantly. But usually during November and December, we do have sharp rally, right? And we're following that alone, right? And in very short period of time, we basically, everything that we sold off from October 18th, right? We went down 30 points and almost in the vertical line went up 30 points. So for now, I mean, let's assume that we're going to close near above 50-day moving average, consolidate. I think from seasonality point of view, I still think, we're just in the beginning of November, we could be trading sideways, right, short term, maybe higher lows, higher highs, right? Maybe even, I mean, with speed, the way we rally, maybe we can actually get to 450, right? But then, even though interest rates are dropping, they are dropping because economic data is getting weaker, right? ISM data, services data, pull back significantly to almost a borderline between expansion and contraction. And even though interest rates done, there will be CPI and PPI data, and if it's going to be similar results as before, right? Fed didn't say anything. Unemployment wasn't really new, but the market was oversold, so we have a rally. When the market is going to be overbought, which is already at these levels, but we might, next level of overhead resistance is, I mean, this is resistance 1, right? And this is resistance 2. Right, so if we get to resistance 1 or resistance 2, market is going to be extremely overbought, right? Market is going to be extremely overbought, and then any data that will, spark the debate whether inflation is, higher for longer, right? Whether it's CPI data or PPI data, I'm not sure. It could be the data in December, right? Then I think the pullback will restart because fundamentally nothing changed, right? The positive news that earnings do seem to be better than expected. So earnings are stronger. We have these sharp rallies in Square and sharp rally in other names. So that's positive. All right. But then I still think the next thing is pullback. The most important charts to watch, again, it's not so much earnings, is the yield, right? 10-year yield already dropped below 50-day moving average, rebound. I think that's very constructive. Dollar dropped also below 105, below 50-day moving average, below this support line 105.5. I think all of that is constructive and gives opportunity for value stocks to rebound and small cap stocks to rebound and other stocks to rebound. Any questions? So how do we help? We have different tools at TradeSpoon, right? Different tools at TradeSpoon. One is the GPTC. So we have tool to analyze any stocks, right, or ETFs. Okay, so you can type in spiders. Okay, you can type stock like spiders. And basically, see, model is doing a good job predicting that support is at 430, maybe consider buying, right? The low for today is 430. And at 435, consider selling short or defending, right? At 435, market is overbought. The vector is actually turning negative, right? Basically saying that, listen, a little bit too far, a little bit too fast, you might get the reversion to mean and the market can pull back, right? So I don't think we're going to get to 400. I think market, model only sees price action. It doesn't look at interest rates. It doesn't look at the currency. It doesn't look at what Powell says. So you do need to have the top to bottom approach. That's where I come in and Scott comes in, our coach, where we analyze the data. So I don't think we're going to revisit 410 or 404 at this point. But 422, I would not be surprised, right? 428, all of that is still in the cards. Next week, I don't think there's anything new, right? Powell speak. I mean, He's not going to say anything different at this point. Initial jobless claims. I mean, Powell's going to speak a few times. I mean, obviously, if he says something negative, right, it could spark that pullback, right? But I still think that he's not going to say anything different fundamentally. So, for the most part, it's a green light short term to continue going higher. So we do have tools like Stock Forecast Toolbox. I encourage you to, if you're day trading or if you're doing longer term trading, consider buying at 430 and selling at 435, right? When you look at these models, if you pull back 6 months, right, it was a great call by the model. Basically, it said 418 is your support for the months of November. Overhead resistance is 463. Model obviously sometimes overshoots the predictions, right? We were at 410, 409, but it does show you that at 418, 410, market is oversold, and you just need an excuse to revert to regression to mean, right? We've been covering this topic, regression to mean, thinking fast, thinking slow, book. Encourage you to read it. Encourage you to, kind of explain, a lot of explanations for the current market you can derive from regression to mean psychology. So those are some of the tools, right? Seasonality chart, stock forecast toolbox, and then we have different services, right? So how do we help you trade in the current market? We have different services. If you have trading plan, right? If you have a solid trading plan in all of our tools, right? If you go to stock forecast toolbox and there are important notes, we're assuming that tools are only good, right? If you have a trading plan and you have risk management skills, right? Because tools and models, they're just tools. Somebody has to navigate them. And you can only navigate them if you have some kind of an experience and you have a process that you trust, right? In terms of when to enter the trade, when to exit the trade, position size, right? I propose to have 4 positions at a time and not to risk more than 2.5% of your account value per position. So $10,000, $250. And if you're doing short-term aggressive trading, you only risk less than 1%. So you always risk the same amount. You have 4 positions and you trust the process. Then we have services like active trader, weekly trader, monthly trader. I already showed seasonal chart and stock forecast toolbox. In active trader, for today, right, you see Microsoft, right? So Microsoft, bullish on Microsoft, bullish on railroads, and bullish on energy, right, EQT. So all of these stocks are opportunity. We have support, resistance levels suggested, which you can use. And then you have to make a decision when to enter, when to exit. I propose, for day trading, you look at the first, let's say Microsoft, right? Right, you look at the first Microsoft, you look at the first 15 minutes, right? 5-minute candlestick, right? And you wait for the market to reach some kind of a bottom, right? So you have 5 minutes, 10 minutes, 15 minutes. If you see a support, then that's when you enter it. If you enter it after 15 minutes, 349 to 350, that's where you can capture, and well, in this case, maybe 30 basis points. But that would be the setup and how you would enter the trade. If you don't have the process that you trust, right? You're still kind of new to trading. Your risk, you risk different amount of money per position. You gain different amount per of your account value per position, right? Then I propose to follow our system, right, and participate in live trading room, right? So we have Elite Circle, which you can see here. Every day you can see all of our trades, right? So today I'm trading Square, right? Doing iron condor. So I'm selling out of the money premium, right? Selling out of the money calls, selling out of the money puts. Actually try to do the defend position we use in stock, right? That I'm still managing. Doing some stock trades. Interest rates are dropping, so I'm adding to my TLT. I propose to have long short positions in your portfolio, so I'm reducing my basically I'm out of all of my hedges right now because I think market still has at least a few more weeks of heading higher. And trim my spiders position, right? At the same time, trimming my spiders position because I think it had a nice run since I bought the spiders. So you have combination of both option and stock trading, right? And the good news is that you can enter your phone number and get SMS messages, and you can see live recordings, and you can participate in live trading room. So if you don't have the process, you don't trust the process, you don't understand what regression to mean means, maybe you don't understand what prospect theory or risk aversion, right? Some of these important concepts for trading, then I encourage you to participate in live trading room. And I can challenge you, we have that in our coaching program. Just try it for 3 months, right? Try it for 3 months. Our elite circle, either participate live in the trading room or at least watch the recording, and do this for the next 3 months. I have a confidence that your performance is going to significantly improve, right? Your performance is going to significantly improve if you're part of our community and you're participating, you're learning, right? You're not just looking at active trader and you're not sure when to enter, right? That you might or might not be successful. It just depends on your experience. But I strongly believe that if you do participate in live trading room, you watch the recordings, you do it for 3 months, you're going to have significant performance in your increase in your performance. So that's the lead circle. If stock and option trades are a little bit too much for you, we do have Robo Investor, right? We also have, if you're only interested in trading option spreads, then we have premium and spread services, right? So those are the different levels of services, right? Either tools and picks, if you trust the process, whether it's your process or you're following my process, or if you're still kind of in the beginning of your journey and you're not sure what how much to risk per position, right? You don't know, do you risk 1% of your portfolio, 10% of your portfolio? Well, then I propose participating in elite circle. We have Vlad's portfolio. We have access to all of these portfolios, and that would be my trade idea. Earnings have been missed. Magnificent bull market with the rest of the market too bearish. Kevin, that's a lot of people try to call that, right? Basically say, listen, well, value stocks are oversold, right? So everybody's jumping on the train, right? And buying value stocks, right? QQQ, your Apples of the world are still trading in a strong bull market. Well, not Apple, maybe it's close to 200-day moving average, so that's not very bullish, especially after bad earnings, but maybe, what's the best? Meta, right? Meta, probably the strongest out of all the stocks, right? Meta is still in the very strong uptrend, almost at 52-week high, or actually testing 52-week high. So the idea is that the rotation out of the Magnificent Seven, which are responsible for all the gains in the past 12 months, versus value stocks. We've seen these rotations before, from value to Magnificent Seven, from Magnificent Seven back to value. They don't for a trade, it's great, right? I think right now, if I have to pick between QQQ that's up 0.6 versus IWM, which is up 2.5, I would pick IWM, right? So as long as this rally continues, I think IWM will continue to outperform. But this divergence is not going to last months and quarters, right? It's going to last days, best case scenario, weeks, right? So I'm not in the camp. You can trade that divergence, right? You can trade it as a pair, but I would not assume that next 6 months or next 3 months value stocks going to continue to rally and Magnificent Seven are going to continue to pull back. I don't think that's going to happen. It is a very common topic, especially if you turn on TV. A lot of people talk about this, but they present it as if this is a trend that has long-term continuation, right? As the trade, short-term trade, I agree it does exist. As a long-term trend, I don't think so. I mean, a lot of people try to guess that for the past 2 years, and usually it's the opposite happens, right? Because they see values in the momentum, they say, okay, buy value, sell QQQ, only to find out that at some point value is going to lose momentum, right? And starts, you know, doing something like this. All right. And QQQ is going to do also, it's going to do a catch up, right? It's going to just follow behind, right? And at some point outperform, you know, value and then drop. So that's my opinion on Magnificent Seven versus the rest of the market. Questions? Any other questions? All right, 9:59. Okay, so before we jump, oh no, let's continue. So in terms of trading plan, right, I propose to always have cash, right? On average, 30% of your portfolio should be in cash. If you're trading options, treat them as a stock. If it's a large portfolio, you can do cash secured puts, or when you do spreads, treat them as cash secured puts or cash secured calls, right? If you have a smaller account, use spreads, right? To again make sure that you're always within that, you know, on a $10,000 account, you don't risk more than 1% on short-term trades and 2.5% on longer-term trades. Wait 2 to 3 days to confirm the trend change, right? Try not to call tops or bottom, right? Yes, everybody was trying to call the bottom. I said you don't know where the bottom is until we have at least 3 days of higher highs, higher lows, right? You have day 1, day 2, day 3. At this point, you know, the bottom is set, right? I don't think we're going to revisit 132, you know, this year, right? So you have reference point, right? Going back to this prospect theory, you need a reference point, right? You need a reference point that is that you can evaluate your gains and losses and, you know, understand what they are, right? At this point, I would say, you know, on value stocks, you say, you know, as long as we're above 134 or 132, I'm a buyer, right? And then, you know, try not to call the top. Right now, same thing. You don't know where the top is, right? It could be 50-day moving average, it could be 200-day moving average. We could get to this line, we can break above this line. But, you know, if you see for the past, you know, if it does this for a week or a couple weeks, it's not going anywhere, well, then, you know, probably, you know, there's another leg down, right? But for now, I mean, it could stop in any of these points. We just don't know. And especially if we're in beginning of November and Christmas is coming, Thanksgiving is coming, we still have a few more weeks of this higher highs and higher lows. So those are some of the rules that I cover in the live trading room, right? Always allow more time, allow more space, right? If you trade in December options, maybe time to roll them to January. More space, you know, if you think we're not gonna get, you know, if we're only gonna retrace half of the recent gains, you know, still reduce the size. Instead of risking $250, risk 100, right? That's what I always use. That's dollar cost average, right? So if on the entire position I'm risking 2.5 per trade, I'm not risking more than 1%. And again, trading psychology is extremely important, and I encourage you to participate, especially in Yellow Tunnel webinars, right? Sister company of TradeSpoon, where, you know, emphasis is in the blog, and the webinars, the emphasis is on trading psychology, right? It's not the prediction, you know, predicting where the market will go. It's predicting how you will affect, you know, what will you do when the trade goes against you or in your favor, right? What, you know, which is summarized very well in this prospect theory, right? An example. I never thought about this, but trading is basically about this scenario, right? If you're, if you up $450 because market just rallied 5%, do you take 50-50 chance to make $1,000, right? 9 out of 10 people, if they don't think about it and they're not self-aware and they don't have experience, right, they will take $450. They basically listen to Vlad and say, oh, Vlad thinks that market is overbought, I'm out. I'd rather keep $450 and not take the choice. 2 days ago, right, 2 days ago, not 2 days, 5 days ago, when the market was down, right, below 200-day moving average at 410, right, and you were down $500, and you had a choice of take a 50-50 chance to lose $1,100. If you don't think about this, 9 out of 10 times people take that 50-50 chance, right? So you hear this expression, people are cutting their gains short and they're letting their losses go too far. This time you went away, got away with this. If you took that 50-50 chance, you're a superstar, right? You think, oh, I figured out the system. I got this. I got this, right? But over a long period of time, for every time you kept your $500 loss, you lost $1,100 or sometimes $2,000, right? So as long as that's the case, as long as you get trapped in this asymmetrical, S-shaped, value versus loss, right? The way you feel about your losses and gains and this risk aversion, I believe you cannot be long-term, consistent, disciplined, successful trader, right? I could be wrong, right? But whether you understand prospect theory or maybe your grandmother told you about this and this is just built into your DNA, maybe, right? But the research shows that at least 9 out of 10 times when you knew and you faced with this decision, you are falling into this cognitive trap, right? Cognitive dissonance. So I encourage you to think about this and find a way to always be consistent. You can always take 50-50 chance to get to 1,000. You can always take 50-50 chance, but the only thing you don't want to be is always take 100% chance on gains and take 50-50 chance on losses, right? That's what we usually do, and if that's the case, over a long period of time, you will struggle, right? You will have a couple months where you're a superstar, but you're gonna have a couple months where you're a little bit less than a superstar. So to me, that's kind of definition of trading, right? As long as you're consistent about position size, as long as you don't fall into this, pitfall, and obviously, the aggregate of your gains have to be greater than the aggregate of your losses, right? If you trade in a system where you're making $450 but losing 500, and it's not better than 50-50, right? Flip of a coin, you just trading water, right? But you have to find a system where you're at least 7 out of 10 times correct, right? And that's kind of what we offer at TradeSpoon. As long as you always risk the same amount on gains, same amount on loss, and you have 7 out of 10 trades successful, I believe in compounding investment, right? And then your investment compounds, and over a long period of time, your portfolio grows. Some of the other things we discussed in our live trading room. Any questions so far? I know I talk a lot and fast. A lot of people get. All right, so if there are no questions, I do want to talk about, we do have this concierge service. His name is Jordan. He's a superstar too. He knows our product. He knows our services, so he can explain, reiterate different services. As you notice, we're running subscription services, right? It's an education company, right? It's a, development software. We have a team of financial engineers, but we have people, if you look at the spectrum of traders and investors, we have all of them. We have future traders, Forex traders, we have stock option traders, people who traded 30 years, people who traded 3 days. And it's different, right? People who are managing $1 million and people who are managing, $500. So I encourage you to talk to Jordan. And some people, maybe it makes sense to do monthly subscription, maybe it's quarterly, maybe it's lifetime, I don't know. But he can steer you in the right direction, and you could be saving thousands of dollars, right? So over a long period of time. So I encourage you to give him a call, 312-625-0287, and he can help you with finding the right subscription. Any questions? Kevin, yes. I mean, right, the glass is half full or half empty. A week ago, everybody looked at the glass half empty, right? Self-serving bias, recency bias, right? Mostly is recency bias. Now, everybody's looking at the glass half full, right? But in reality, the glass remained the same, right? For every bullish argument, there is a bearish argument. Bulls say earnings are better than expected. Now yields are dropping, dollar is dropping. Bulls are in control, right? Bear is going to say, well, the recession is imminent. Companies are defaulting at higher rates. Credit card balances at all-time high. Next week, we're going to have a $500 billion auction in treasuries, right? $500 billion. I almost fell off the chair when I heard that. I mean, it's staggering numbers of how much debt they're raising, right? At some point, there might not be enough buyers, especially when yield dropped, right? So, there's always, for every bullish argument, there's a bear argument. Going back to game theory, you have to be flexible, right? I was, you know that I'm a bear over a long period of time, but I was the bull when we reached 410, right? 410, 415. I said, we can continue going lower, but we're probably going to have most likely going to have a Christmas rally. I don't know from which point it's going to start, but after day 2, day 3, I can say, okay, Christmas rally is here, right? And you can see we've prepared for this event. I closed a lot of bearish position, added to my bullish position, and so that's important to be flexible, right? Very important to be flexible, right? You don't want to be always a bear. You don't want to be always a bull. You can continue. In the past 2 years, I was thinking about we're trading the bear market. Sometimes it worked out really well. Sometimes, obviously, it didn't work very well. But at least stayed consistent. But during these short term, right, on short term to medium term, I've been a bear, I've been a bull, and I realize, I just look who's winning, and I go into that camp. Kevin, Magnificent 7 ETF. I didn't find Magnificent 7 ETF. I know on CNBC there's an index. I don't think you can trade it, right? BIGT, maybe BIGT. BIGT. I learned something new today. Let's see, BIGT. Do I need to do this? Where's the hole? So I just want to make sure this is the right stuff. 5% tech giants. Okay, so it looks like BIGT is the closed one. So pretty sharp drop, right? Pretty sharp drop in BIGT, and looks like pretty strong rebound. Questions? All right, if there are no questions, then that's all I have for today. All right, I'll stick around for a couple more minutes, answer your questions. In terms of yield, we're close to session low. We were as low as 4.48 today. So yield continues to drop. Semiconductors higher, spiders are close to session high, probably. Actually give up half of its gains. Small caps up, ARC Innovation is up. GDX, strong price action in silver and gold miners. Any questions? Let's see. All right, if there are no questions. We do have broadcasts, by the way. We do have broadcasts on YouTube. So if you haven't participated in the live trading room, we do have it on Wednesday. So please click on subscribe. A lot of people are watching these videos, but they don't subscribe. So hit the subscribe button. And if you like the content, please share it on social media. Thank you very much and have a great day.